At this time, all lines have been placed on a listen-only mode, and we will open the floor for your questions and comments following the main presentation. You can press 1 followed by 4 at any time to enter the question queue. Before management begins speaking, the company has the following statement. This conference call contains forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995, including those related to the effects, if any, on future results, performance, or other expectations that may have some correlation to the subject matter of this conference call. Listeners are cautioned that such forward-looking statements involve risks and uncertainties, including, without limitation, delays, uncertainties, inability to obtain necessary ingredients, and other factors not under the control of the lead, which may cause actual results, performance, or achievements of a lead to be materially different from the results, performance, or other expectations that may be implied by these forward-looking statements. These risks and other factors, including, without limitation, the company's ability to obtain sufficient funding under the LPC agreement or from other sources, the timing or results of pending and future clinical trials, regulatory reviews, and approvals by the Food and Drug Administration and other regulatory authorities, intellectual properties, protections, and defenses, and the company's ability to operate as a going concern, as discussed in the Elite's filings with the Securities and Exchange Commission, including its reports on the Forms 10K, 10Q, and 8K. Elite undertakes no obligation to update any forward-looking statement. With that covered, it is now my pleasure to turn the floor over to your host, Mr. Nasrat Hakim, President and CEO of Elite Pharmaceuticals. Sir, the floor is yours.
Thank you, Tom, and thank you, ladies and gentlemen, for joining us today. Our update will be structured in the following manner. Our Chief Financial Officer, Carter Ward, will present Elite Financial, followed by an update from our Executive Vice President of Operations, Doug Blashy, on the status of the site and manufacturing. Then I will make my final comment before we go to question and answer. Carter, you have the floor.
Thank you, Nasrat, and thanks to everyone calling in today. Last Friday, we filed our 10Q for the quarter ended December 31st, 2013. We're on a March fiscal year, so the December quarter is the third quarter of our 2014 fiscal year. Financials are available online at elitepharma.com, as well as sec.gov and all the usual sites like Google, Yahoo, MSN Money, and OTC Market. Just come back from a long holiday weekend, so hopefully most of you had a chance to review our financials. We also issued a press release this morning announcing the successful results from the first pilot bioequivalence study for our twice-daily abuse-resistant oxycodone, as well as the supplements that are being prepared in relation to the manufacturing site transfers for the first group of the generic products that were recently required. If you haven't seen the press release, it's available on elitepharma.com. But getting back to the finance update, those of you who are regular listeners to these investor calls will know that a common theme that I stress is that our financials don't just tell us how we did in the quarter, but they also give us insight into the seeds being planted for the future. Well, the how we did portion of the financials is clearly showing that those seeds from the past are starting to bear fruit. Let's start on the P&L statement and the thing that really jumps out, and that would be our revenue. Our revenues this quarter were almost $1.7 million as compared to less than $700,000 for the prior year. Now, no matter how you look at it, revenues are up significantly. They're up by more than 150% as compared to last year. They're up by 90% if you look at the total of the first 3 quarters of our fiscal year. Revenues are even up almost 50% compared to the September quarter. And that September quarter was also really strong with regard to revenue. So it's clear that revenues are heading in the right direction. Strong growth in our revenues comes from the combination of 3 factors. First are the products launched in prior years, specifically hydromorphone, phentermine tablets, and methadone. Revenues from each of these continue to grow, and they're performing well, just as we expected. Second are the products launched this year itself, this fiscal year, phentermine capsules and naltrexone. These products are relatively young in the market. They have been doing well, and their contribution to our revenues is not insignificant. The third factor is the 12 products which were acquired last August. These products have already begun bearing fruit in the form of revenue. During this quarter, we signed a manufacturing and licensing agreement with Epic Pharmaceuticals and have earned $600,000 in milestones so far. This is a clear example of the seeds from the past bearing fruit in the present. And this is just the beginning for these products, which we expect to generate increasing and very significant revenues in the future. The acquisition of these 12 products is an important part of our strategy to create a strong commercial foundation, and it's already making a noticeable contribution to revenue. As per today's press release, you'll see that we expect to file the CBE-30 for isradipine in March, and that we expect our partner, Epic Pharmaceuticals, to file CBE-30s for dantrolene, loxapine, and hydroxyzine by this June. So we're definitely moving forward nicely with the commercialization of these products. Revenues are important to us, and we're on schedule to meet our goals. Now, moving down the P&L, the next thing that sticks out is research and development costs. R&D expenses were $1.3 million, which is a $1.1 million increase, or 441% on a year-on-year basis. If you compare R&D expenses for this quarter with the September quarter, you'll find a 51% increase. So like our revenues, it's pretty obvious that we're spending more than ever on R&D. In fact, the $1.3 million spent on R&D was greater than our $1.2 million operating loss. I want to say it another way, if we spent nothing on R&D, we would have had an operating profit. This is the second consecutive quarter where this holds true. But modest short-term profits aside, product development, and specifically the development of a full line of abuse-resistant opioid products, is our future. In the past 2 months, we have initiated pilot and pivotal clinical trials for the first 2 of these products. We announced the successful outcome of the pilot study today, and the pivotal study is still ongoing. There is significant and increasing product development activities ongoing throughout our factory and lab, so the cost will naturally be up. Nazra will have much more to say on this subject, but from a financial perspective, this is what we should be spending on. R&D is the lifeblood of any pharmaceutical company, and the abuse deterrent product line being created is really spectacular. Before moving on, just wanted to add a few comments about the finance of our product development activity. While we will not be disclosing specific products here today, we do have more than 15 products that utilize our abuse deterrent technology on our depth chart. We want to commercialize all of them, and we want to do it as quickly as possible. Technology is there, and it is sound. The successful clinical studies bear this out. Commercializing these products just takes money and time. As usual, the more money we have, the less time it will take. Pretty much as simple as that. So what are our plans with regards to financing all of this? Well, as Nazra mentioned in the past, there are ongoing and substantive discussions with multiple companies who have a keen interest in our products and technology. Generally, these types of discussions concern some sort of partnering relationship with a means by which product development activities can be financed. That is certainly something of interest to Elite, but if the other party feels that they are the only source of financing available to us, they will view that as negotiating leverage. And that's something that's clearly not in our best interest. Therefore, important to have other sources of finance which we could use to either develop the products ourselves or at a minimum put us in a stronger negotiating position with these potential partners. In either instance, we expect the result to be a better deal for Elite and our shareholders. Now, the most viable of these other financing sources are the recently created Series I preferred shares, which I'll discuss in a little while, and an equity line similar to the Lincoln Park equity line, which was set up last year, and has been of such a great help to us currently. Now, you need to know that both of these options require an increase in the number of authorized shares, which must be approved by our shareholders. We do get a lot of inquiries on the subject, and it is something that we are evaluating. Now let's talk about Series I. Hopefully I can provide some clarity. The Series I is convertible into common stock. It's pari passu with common, which means that even though it's called preferred stock, it's still only equal and not senior to common stock. It also includes voting rights on an as-converted basis. Now that means that you can vote as a common shareholder without actually owning common stock. Series I was created to address two purposes. The first was to create a means by which Nasrat Hakim and our chairman, Jerry Treppel, could vote the shares underlying the convertible note payable which have been issued to them. Nasrat invested $10 million in Elite, and Jerry invested $600,000. There weren't enough available shares to give to them, so instead, they agreed to accept a convertible note payable in stock or cash. Since we need the cash, we don't have the stock, they cancel their note and receive Series I shares, which allows them to vote like a common shareholder, and it ensures that Elite doesn't have to pay them cash. Each of them receives Series I shares, which converted into the same number of common shares as the note payable which they are canceling. We've received comments about discounts being given, and that's just not the case. This is why Jerry Treppel received only $420,000 of Series I shares in payment of the $600,000 note due to him. Due to different conversion prices, he had to receive less Series I shares in order to have the same number of underlying common shares. The second purpose of the Series I was to provide a viable alternate source of finance. There are 500 Series I shares authorized, and only 104 of these shares have been issued. The rest are available. Having such an option is certainly a positive for our future. One last thing on Series I, and it's that the Series I doesn't solve the issue of authorized common shares not being available. That is something that we will eventually have to address. But having the Series I allows us to address the issue in a time frame that works best for Elite and our shareholders. Finally, I wanted to talk about the Stockholders' Rights Plan. I mentioned this in our last call, but we've been receiving inquiries on it, so now it's a good time to get to comment in a little more detail. The Stockholders' Rights Plan is often referred to as a poison pill. It's something that management typically adopts when they feel their company is significantly undervalued and susceptible to a hostile takeover. It's a legal mechanism which forces an acquiring person to negotiate in good faith, and it provides provides protection to all the other shareholders of a company. Last summer, when our stock was at 10 cents and even lower, and knowing what we were working on, we all felt we weren't a 10-cent company and thought that other parties would soon come to the same conclusion and that they would seek to buy us on the cheap and then transfer the value away from the rest of our shareholders. That's the classic situation why you need a stockholders' rights plan. So what do? We engaged a prominent consulting firm in the field of company and stock price valuation. These are consultants who are viewed as authorities on the subject. They have written the leading textbooks on the subject, and they work regularly with the investment community. They conducted a thorough study with lengthy interviews and due diligence. And then they finally issued a 30-page report which confirmed our opinion. The report shows a conservative valuation, a most likely valuation, and a best-case valuation. And I can tell you the conservative valuation was 40 cents, the most likely was $2.10, and the best-case valuation was $2.75. All of these are on a fully diluted basis. So that's 40 cents, 210, and 275. And that's not future value. That's the present value today. Future value will be more. Now, these valuations are based on Elite executing its strategic plan, and we're on schedule, as you can tell by our financials. The creation of a sound commercial base is occurring, as evidenced by the rapidly growing revenues, and our product development is continued and accelerated. If you read the stockholders' rights plan, you'll note that we use the most likely valuation, the $2.10 number, as the value assigned to the Series 8 shares included in that plan. Now, the valuation was needed for the creation of the plan, but more importantly, $2.10 is what independent experts in the field have calculated as the most likely value of our stock today. With such a spread between the current price and the underlying value, having this stockholders' rights plan is invaluable. Today, based on our stock price rising from 10 cents to the current levels, I think we broke 40 cents today, it's clear that many of you know we're not a 10-cent company. However, we here at Elite feel we're much more than a 30 or even a 40-cent company as well. So with that, I'd like to introduce our Executive Vice President, Mr. Doug Pashy, for an update on operations.
Good afternoon. I will be quite brief. I'll focus on three key areas. One is really building what I'll call our infrastructure, quality, compliance, regulatory position. We're focused on improving facility, utility, operating equipment, as well as our DEA systems, which is really our lifeblood. So there's a number of activities going on in all those areas, including automation, technology, and basic physical improvements. On the commercial business, there's no issues with meeting the demand, and the good news is in the rest of the year, the demand actually shows an increase, and we're positioned to deliver all those products on time. Isradipine, which has been mentioned a couple times, should be filed in March, and we're preparing either to launch at a small scale, which we filed the submission batches at, or hopefully a large scale, which we have the piece of equipment being delivered next week. In the fourth quarter and early this year, extensive activity in R&D, pretty much, I think, unprecedented in time of Elite in terms of the number of batches manufactured, placed on stability, and tested. And it's been alluded to, the first product actually went on stability before the end of the year, and we're targeting a December 2014 submission. Um, Around the same platform, we have a number of products which we have done initial trial batches on a small scale, and all the results are promising, and we intend to now manufacture those at a submission scale. It's quite a complex list of products, given all the strengths and different varieties, but with, as Carter said, with the right financing, we have the team here to execute those in a very timely fashion. So that's pretty much my update. I'll turn you back over to Nazareth.
Thank you, Doug. I am very proud of the progress Elite has made to date at all levels. First, we are creating strong fundamentals for Elite by maximizing our profits, by negotiating better API pricing, whether it is for phentermine or other APIs and excipients, by investing in the infrastructure, equipment, and hiring new personnel, by introducing the new products that we've been discussing, isradipine and ventrolene and hydroxyzine and loxapine here and through our partner at Epic, and also by working on future generics. The future generics will not be anything like what we have now. A lot of our products are decent, but in my opinion, they are more like the breadcrumbs of the pharmaceutical industry. Our future generics, we will be going after seriously viable products. As Carter mentioned, on fully diluted basis, our midpoint or our most likely scenario, the stock should be at about $2.10. That is not because of the products that we have today. It is because of our art technology. Our patented art technology is fantastic. Our announcement regarding the mega pilot study for the BID was really a main factor in moving forward with that product. The results were excellent, and the reason I say it's a mega pilot is because we started with 16 patients, and we did a 4-way crossover. Therefore, we had 64 subjects. That's not normal for a small little pilot study. The second set of clinical trial results for the undisclosed anti-abuse product will be available around the first week of March. This is a full DE study, and we will issue a press release towards the end of the first week of March or beginning of the second week with the results, which I trust will be successful. The next step after getting a successful DE study is to be engaged in a human anti-abuse liability study. We have already initiated that. In concert with FDA guidance, there are 3 tiers for that study. There is a snorting study, oral study, and IV study. These are very intricate studies that in the entire United States, there is only one lab that conducts this kind of study, and all of the Americas, there are 2, one in Canada and one here in Salt Lake City. It's a very specialized area, and it is very expensive. The snorting study is the greatest concern for FDA because it's the easiest way for people to abuse narcotics or opioids. All they have to do is crush the opioid and snort it. Our art technology would shine under these conditions because as soon as you crush the bead, the naltrexone will render the opioid ineffective and nobody can abuse the product using that method. The oral is taking several doses. You can control that and maybe crushing it. And the IV is a lot more elaborate where you have to extract everything out of the opioid and inject it. In concert with the human anti-abuse liability study that we have already initiated, we are concurrently working on in vitro study. The in vitro study will comprise, in vitro means in test tube or in the lab. It will comprise some scientists trying to use household products to see if they can abuse your product so they can give you advice. That's also not a cheap study. It runs $500,000 to $1 million as well. So all of these studies add up. And when you have an appetite like mine and more than a dozen products that you would like to go to clinical trials with, this gets to be expensive. So that will lend itself to us trying to find a partner or financing in the manner that Carter was talking about. So the third thing I would like to update you on is partnership. We are actively pursuing a partner. We had Jerry Peppel, our chairman, and I had a meeting with a company yesterday, actually on President's Day. Another major pharmaceutical company, very viable and one of my favorites, were coming to see us, and we had to delay it by a couple of weeks due to the snow. But the discussions with a partner are very viable. We cannot depend just on that. We need to make sure that we have a plan B and a plan C to ensure that this company is going to deliver on all the products. I hate to see us in here do the products one at a time and go serially and take several years. I really would like us to figure out the best way for financing and do them concurrently, so this way we will maximize the return for the stockholders. Okay? Once again, I am very proud of the elite team, and I'll tell you something personal. My family made these coffee mugs for all elite employees and the board of directors, which had the elite logo on them, and underneath the logo it said, "This is our year." And so far, it definitely is shaping up to be that way. We are open for questions.
Thank you very much, ladies and gentlemen. The floor is now open for questions. If you do have any questions or comments, please press the number 1 followed by 4 on your touch-tone phone at this time. Pressing 1 for a second time will remove yourself from the queue should your question be answered. Lastly, we do ask that while posing your question, you please pick up your handset if listening on speakerphone to provide optimum sound quality. Once again, if you do have a question, please press 1 for now. We'll take our first question from the line of Steve. Steve, your line is live.
Good afternoon, gentlemen.
Good afternoon, Steve.
I first want to congratulate you on the great job you've done over the last few years, particularly in the past 6 months. It clearly is paying off for the company and the stock. My question is, at this point in time in the history of the company, you've come back from the brink of bankruptcy. You've garnered enough of the smaller drugs to cover operations, and it looks like soon the research and design cost related to the art products. You've inked the funding deal with Lincoln Capital. I put the poison pill in place, and you also reinitiated art studies after a 7-year hiatus. Now we come to those preferred shares that you'd mentioned and the need for a partner. Can you comment on the new preferred I shares, and particularly on the attached voting rights? I realize most or often the preferred shares do not carry voting rights. What's the relationship between the voting rights and the potential partnership?
Well, the voting rights, they vote on an as-converted basis, so one for one. So if you have preferred shares, Series I shares that convert into 1,000 common shares, you get 1,000 votes. As if you had converted those into common stock. They're really, as far as preferred shares go, they're one of the least of the preferred, since they are pari passu to common. They're not senior at all. The option that they give to us is just another means of financing. We can issue these shares. People are interested in the future of the company, and it's just a mechanism by which people can invest in the company when we don't have authorized shares to give them. Like I said, it doesn't address the issue of not having enough authorized shares, but it enables us to bring financing in now from interested parties and deal with the authorized shares in the future when it's in our best interest to do it.
Steve, regarding the issue of voting, let me articulate it this way. It's a matter of fairness. Jerry, our chairman, loaned the company $600,000. Jerry could have gone out on the open market and bought $600,000 worth of shares that he can do with whatever he wants anytime he wants. Instead, in support of the company and taking a huge chance on the company, he decided to invest these $600,000 into our shares. Because we do not have enough authorized, we gave him a note. Okay, so now he has a note that he cannot even cash out or do anything with, and he didn't have voting rights. The least we could do is try and get people who are investing cash into the company instead of buying stock on the open market, is the ability to have a voice in the company. So he's done a great service to us. We could have given him the money. However, we much rather use it for clinical trials. He was very kind to us. In return, we added the voting as a fairness. If anybody else in the future wanted to buy some of these shares, then they will also have the same opportunity to be able to vote.
Yeah, I guess that was my assumption, was that the voting rights make it look, how would I say it, look more promising for a potential partnership that'd be more interested in buying those shares because of the voting rights. Is that an accurate assumption?
Yeah, I would say so. I mean, that's the only real advantage to the Series I is that they provide these voting rights because they're not senior in any respect. There's no preferences given other than voting on an as converted basis.
Now, one more thing, even though what you just described and Carter answered to is not our number one or preferred means, we much rather find a partner so this way it will be a non-diluting event for stockholders. If we do not find a partner that has a really decent marketing capabilities and viable and treat us fairly, then there are other options. A joint venture, going at it by ourselves, there are many other options. And as long as you create options and you're not pushed back against the wall, you're in good shape. So this is one of the options we're thinking of. However, I want everybody at the sound of my voice to know, now that we have gotten the results of the BID and the undisclosed is coming next, and now I have something tangible in my hand, except to just my word and my contact in the industry, I will be hitting the road in order to ensure that we get a partner, but that partner must be on our terms or at least very fair to our stockholders.
Makes sense. Makes perfect sense. Another question in my mind. Can you comment on Epic's recent sale of shares over the last month or so? Is this to cover their milestone payments to Elite?
Let me comment on that, even though Epic really will be in the best position to do that, but I'll make an exception. I looked at the paperwork that we have through Carter and Diane. Epic, first, the directors, Dr. Nigali and Jai, have never sold a single share of the shares they personally own. Period. Second, the company as a company has the right to sell 1% per quarter of the shares they own, and they have not fully exercised that right. Epic is a company that's running a lot of bioequivalencies and biostudies themselves, and also made an investment in us. So yes, they have sold some shares. Was it to raise money to pay us or to go ahead and pay for some of their biostudies? I'm not sure, but all I know is that, what I know for sure is that they definitely are not exercising as much as they can, or they are capable to under the law.
That's what I had thought as well. I just wanted to ask for clarification. One last quick question from you, Nazrat. Might ask you to speculate a bit, but given the recent court case where a federal judge ruled that Teva didn't infringe upon any of Purdue Pharma's valid patents related to OxyContin, if that court case is upheld, how would this impact Elite's intellectual property rights, if at all?
I don't think it impacts it at all. The technology is profoundly different. Okay, they use a critical approach, and their case wasn't very strong. Actually, the judge thought that Teva is infringing, but he didn't think it was material. But ours is totally different. It's a pharmacological approach that does not even resemble what the case was about.
Okay, I was just kind of curious in terms of, and I know know that Pfizer has to pay pretty royalty fees on their technology. I was just wondering if it affected.
I'll give you a different speculation, though. There will be very few players in this market because the anti-abuse is a huge market, and in order for you to get in, you have to have patented technology. If you start right now, you're not going to get in 14 years from now, or partner with somebody that does. So we are in a great shape in Elite to be dancing with the Tevas of this world and the Purdue's of this world and the Pfizer's of this world, and I really welcome that because at the end of the day, it will be very few players and a ton of billions of dollars.
Sounds very nice. Appreciate your time, gentlemen. I'll give the floor to somebody else who has questions.
Thank you, Steve.
Thank you, Steve.
Thanks.
Ladies and gentlemen, the floor remains open for questions. If you do have a question or comment, please press 1 followed by 4 on your touch-tone phone. Our next question comes from the line of Chris. Chris, your line is live.
Can you hear me?
Not very well.
Yeah, speak up a little, Chris. We're having trouble. All right. Two-part question. First one's quick. The investor rights documentation. Can that be found online anywhere? Yeah, that's filing 8K or 8A, I think. That was back in November. Okay. You go to SEC.gov. You go to all the usual places, you'll see it. Okay. Second part, the Lincoln Park, the $10 million funding commitment. What's the status on that as far? Can you disclose how much has been borrowed, and are you going to look to exhaust that first before you move ahead and look for additional funding? Well, it's already in place, so definitely. So as far as exhausting it or utilizing it, that would be that would be the way to go. If you look at our statement of changes in stockholders deficit, it's F4 of our financial statements. You'll see that through December 31st, we had utilized roughly. Trying to just give you the. It was roughly around $4 million. Okay. Sorry, $3.5 million as of December 31st, and we've been drawing down since then. Okay. All right, that about does it for me.
Thank you, Chris.
Okay, great. Yeah.
Our next question comes from the line of Craig. Craig, your line is live.
Gentlemen, obviously, congratulations on the progress so far. I actually have several questions, and you could take any of them in any order. When you discussed the 3 valuations that were used or generated or developed in coming up with a shareholder rights plan, I'm just curious, we go from 40 cents to 210 to 275, if you could articulate what was the principal factor, the difference between 40 cents and 210 on the valuation. I'm curious as to what the makeup of that was. That's one question. Secondly, if you could give a little guidance for that suite of products that is throwing off this $1.5 million in revenue, are you able to give any guidance for fiscal 2014? And then the 2 other questions, one short, what the status is of any patents so far on your proprietary delivery system, and regarding, Nazim, the potential partnerships that you're talking about and talked about on President's Day, would you be looking more ideally for a marketing and royalty type of an agreement with a big, strong partner, or are you looking for something along different lines?
Okay. Let me start from the bottom. I didn't hear number 2, but I'll start with the partnership. I am a very, very open-minded person. A partnership, to me, is a case where you look at what are the stockholders going to be getting. If somebody wants to just market the product, hey, we'll talk. Not my preference. I need somebody to put in some money into the company so I can do multiple tries. If somebody wants to pay me a sunken cost pay for the clinical trials, payments upon filing and approval, and go for a certain split. I'm open-minded, and the amount of money will determine what the end is. I have no issue with any of that. I have no issue with starting a joint venture, and we've done that before at other companies I've worked for. And I have no issue with going myself with, this is my least favorite, even though we can do it, because that would mean I'll have to slow down some of my R&D ambition. And right now I'm killing Doug by having him run about at least half a dozen anti-abuse formulations for us to move forward with. So the bottom line is anything that is viable, that makes sense, that's in the stockholders' best interest, I will evaluate. With respect to the patent, yes, we have a third patent regarding the art. I've signed all the paperwork, we paid the fees. It has been allowed just about a month ago, more than that. So I expect within the next couple of weeks it will be issued. Once it's issued, we will issue a press release. Usually we wait till it's issued. The fact is, when it's allowed, it's almost as good as done. It's a matter of paying fees and a little bit of timing. The process I hear changed at the USPTO, and they're moving a little slower, so this one will be coming soon. Okay. The second question, Carter, if you can take that, I didn't hear what it is.
The valuation?
Yeah, I mean, 210 to 275 is, one thing, but 40 cents to the 210. I'm curious as to what assumptions were in that caused that. Was it simply the approval of these products, and was the 40 cents based on non-approval? I mean, I'm just trying to understand the gap there.
I honestly don't know, even though I stepped in a few of the meetings, but the experts who are there, Carter, maybe you can address.
Yeah, Craig, you have to understand the scope we're looking at. The nature of this valuation, it encompassed not just our product or our cash flow, our future discounted cash flows and revenue projections, but they also took into account various macro factors that would have to do with the overall economy, the interest rate, whether the timing of approvals, whether or not we got approvals, the general direction of the stock market as a whole, where financing was coming, what financing would be available as far as investment bankers are concerned. So the 40 cents, they call that, the most pessimistic, where everything was falling apart, things weren't working as we thought. They're trying to take the most conservative approach. The economy was tanking, no money was available, slowing down our product development, problems with the FDA, you name it. That's the worst case scenario.
Okay, well, that's kind of where I was getting to. In other words, I felt that was probably pretty much it. So you've answered that question.
Right.
Can you give us any guidance as to fiscal year 2014 as to the present suite of products and what kind of growth we can expect in revenues?
You're talking about the current products, the generic products?
Yes.
Something we generally haven't been giving that type of information out.
Let me do this. I don't have exact numbers for you, but let me give you a couple of numbers. For Isradipine, which we're filing, and notice we said we're filing the CBE 30 next month. Okay, then it goes into the FDA, and they'll decide how fast the 30 days are counted. That product is a $6 million product, and there is only one player in the market that's activist. Dentroline is about $12 to $13 million product, and there's only one player in that market. So once they get approved, we can give you projections on what we could make. Right now, we need to get through the FDA approval hurdle and start working in that direction on filing and all of that. We'll get to the next question probably sometime mid-year.
Okay. Lastly, in your press release this morning, you mentioned that the study, that your particular trial of the product showed superior results to a comparator product. I was curious if you could identify that product in the company. And lastly, what type of increase in outstanding shares would you be seeking on the common, and when do you think that proposal would go to the common stock holder?
With respect to the company, the reason we wrote it that way, even though we know the company's name and have their data, is because the legal team asked us to. So we're not going to disclose it verbally when we couldn't do it in writing.
You're talking about with regards to potential increase in authorized shares. Is that your
Correct? Yes.
Well, that's something that we're currently evaluating, and we haven't made any decisions yet on that. And so, but a decision will be made shortly, and when that happens, it will be announced to the public.
All right. Well, gentlemen, thank you very much, and obviously, congratulations on everything that you've all accomplished so far. We appreciate your hard work.
Thank you very much, Greg.
All right.
Our next question comes from the line of Stanley. Stanley, your line is live.
Congratulations, gentlemen. I've been a holder of a lease for quite a long time, and I'm really happy to see that the stock is finally moving. Just two questions. What does the success of this trial mean to Elite? That's number one. And number two, how will it generate additional revenue going forward?
As the first question, this is huge. It validates the company and technology. And Stanley, as you heard me say earlier, I have talked to several international pharmaceutical companies, and believe me, it was all a passive solicitation. A chairman or CEO will call me, or I'll be talking to a colleague who is CEO of a company, and they'll become really interested. I have not been pushing because I needed something in my hand that's tangible to put the company's reputation and mine on the line. I wanted us to first go through these trials. So the first step is the one that we went through right now, which I'm very happy with the results, and the second will be the results we'll get in March. That is huge for us. Okay, that really validates the company's technology on a large scale. A BE study, we've never done a BE study on anti-abuse in the history of this company. So next month, in about 2.5 weeks, we're going to have results for the first time on a full bioequivalency on our technology. Okay. Carter, the second part was regarding revenues.
The second part was, how will this generate additional revenue going forward for Elite? Carter.
Oh, okay. Well, having the data, the most likely scenario is having the data and the proof of the product working. There's already a lot of interest with potential partners, and so probably what's going to happen in the short run or the short to medium term is that the fact that we're able to demonstrate clinically that this product works will lead to a partnership deal. Right now, there's a lot of discussions and a lot of interest, and and they're saying, okay, well, you're going to have some results in the next 2 to 4 weeks, so let's see how it works. And then, so that's going to be the catalyst. We're not able to get a good deal or a fair deal. This just brings us further down the road to commercializing the product ourselves, where the money would be greater, but the time frames would be longer. That's pretty much.
Carter, I've spoken with you several times about the possibility of a reverse stock split. Is that still something that Elite might be looking at going forward? With that number of shares outstanding, it really holds back other institutions from looking at your stock.
Let me answer on Carter's behalf because I feel very strongly about this point. Someday, we may have a reverse split. Today, I am absolutely certain if we have a reverse split, because, again, everybody is looking at us as if we are already a fully functional commercial manufacturing company, they're going to start looking at the fundamentals, and the stock will start to gravitate back to a penny stock. I will not do that to the stockholders. We will have some kind of a reverse split once the stock gets to $1. Once we have a partner, once we file, and I do believe on the rate we're going to be filing an application this year, and we're going to be launching by the end of next year. So So that's when we start to have fundamentals, and then I feel more comfortable. Then yes, we're going to protect the stockholders, and if I have a reverse split, then the institutions will take over and will take it further. But at this time, it doesn't make any sense to me.
Okay, thank you so much.
All right, Stan, thanks a lot.
Our next question comes from the line of Nate. Nate, your line is live.
Yes, my question was just answered. Thank you.
Okay, Nate. Have a nice day.
Thank you.
Our next question comes from the line of Drew. Drew, your line is live.
Hi, Carter, I guess this question goes to you. I'm just curious if there are any limitations to the shareholder in regards to the poison pill. Specifically, are the number of shares that could potentially be purchased by a shareholder be limited to a specific number?
Well, first of all, you have to keep in mind that the poison pill only comes into effect if somebody acquires, I believe it's either, I think it's 15%, and they refuse to negotiate, terms with the company. So we're not aware of any situation where such a thing actually happened in corporate history. But what happens is if the poison pill does come into effect, there are rights attached to the shareholders. It's a complicated calculation, but basically it allows the shareholders to buy a number of shares each at half the ongoing market price. The number of rights they get is proportional to the number of shares that they own, and it gives them the right to purchase those same number of shares at half the market price.
Okay, so they would be limited to whatever they hold at the time that the poison pill would be in effect.
Yes.
At half of the cost.
Yeah. I mean, so listen, how it works is it creates a lot of dilution, which makes it very unattractive for what's called an acquiring person. This is the person trying to do the hostile takeover. That person does not get these rights. They're excluded from these rights. So they would be offering or trying to buy up the shares, at something around market or even above, whereas everybody else would be able to buy at half the price.
And this would be triggered at 15%.
At 15%, and after I think 10 trading days, there's a bunch of things that have to happen.
Okay.
And mind you, we have not found a single situation where this has actually come into play. Not saying that it hasn't happened, but it's very, very rare if it does, and we weren't able to identify a case where a poison pill was actually triggered.
Okay, great. Thank you so much, sir.
Okay, you're welcome.
All right, take care.
Our next question comes from the line of Matthew. Matthew, your line is live.
Good afternoon, guys. First of all, congratulations to you for all your hard work in the terrific quarter. A few quarters in a row, you guys, the company is just doing fantastic. My question revolves around Nasra, which you noted earlier before. You noted 6 products that you have Doug working on. There's about 15 of use-term products that you kind of have in the queue that you're looking at. Can you compare at least product development timelines and costs to some of the other technologies out there, sort of a 1B technology that maybe Pfizer's using or some of the physical approaches? Is it cheaper? Is it more efficient? Because I see that as a bit of a differentiating factor. I was looking for your input on that.
Okay. I don't have data for other companies, but I do have data for the clinical entities that we deal with, because they deal with the same ones. The cost, other than for raw material, the cost is identical. Now, when you conduct a BE study, the blood samples and all the analysis are the standard price. When you conduct a anti-abuse study, which I talked about earlier, the snorting and the IV and the oral, that cost is about $5 million if you do all 3, whether we do it or Pfizer does it. And as I said, there's only 2 labs in the entire Americas, one in the US and one in Canada, that perform this. So all the cost in getting the product to the market, barring the raw material, is identical. Which raw material is more expensive? I'm not sure. I think for Pfizer, for example, they use naltrexone, and same it's the same. For Do, it may be a little cheaper because they're using polyols. But overall, it doesn't have material impact.
Okay. And then the 6 products and then 15 products in the queue, are these different, completely different APIs, or are these different strengths of similar APIs?
No, actually, these are all different APIs with different technologies. Let's say the twice a day and once a day count can get count twice, but we have several molecular entities. We have a minimum of 5, which you can probably guess all of the opioids, in addition to making them in different configurations.
All right. I think that's all I had. Thank you very much.
Thank you.
Our next question comes from the line of Andrew. Andrew, your line is live.
Gentlemen, first I want to say congratulations on all your success. I've been a holder for a while, and good to see the stock is finally starting to move up. All my questions have been answered, except I just have a small one regarding your 5 commercial products pending site transfer. How, if at all, will that affect the stock price?
It's financial. Arthur, you can take it.
I wish I knew how things affected the stock price. I can tell you how it'll affect the company. And that is, I mean, obviously, when the product, when the site transfers are approved, there are various milestones that will be generated, and then plus there'll be sales in the market, and we get our share of the profit from those sales. So we're talking about a very important revenue to the company, very significant revenue for the company. It's a big deal for the company. It's very important to the company, and I would imagine that this would be viewed positively by the investors.
And how soon do you anticipate any of these site transfers to be happening in the next 12 months?
12 months. Well, yeah, all of them within the next 12 months. We're probably going to file the isradipine in the month of March itself. And the other products, they'll probably all go, before June.
We're filing CBE 30, and within 30 days we have the right to launch unless we hear otherwise from FDA. So if we file in March, we could possibly have product in the market by the end of April, let's say. But again, unless the FDA says, well, hold off, we want to audit you or something else, that's why we're not giving you exact date. Epic has given us a very nice project plan, which shows that they intend to file all the others by June. And they've already hired, I believe, a head of sales and marketing in order to start selling these products. So once we get over the FDA hurdle, then we will give you a better prediction.
Okay. Thank you very much, gentlemen, and congratulations again.
Thank you, Andrew.
Our last question comes from the line of Brian. Brian, your line is live.
Good afternoon, gentlemen, and thank you for all your efforts so far. I have a question regarding isradipine. I guess we were under the assumption, or I was under the assumption, that Epic would be manufacturing these, and according to today's release, it looks like Elite will be manufacturing. Can you touch on that? Also, Doug, can you touch on capacity of the facilities and where we're at with that, if we're looking at maybe doing a second shift? We know that there's you have some applications out there. You're looking for some more help inside the production facilities. If you could touch on that. Also, how many employees are currently employed? And Carter, if you could maybe touch on the dividends that go along with the Series I. I have a couple questions on that. Not sure what's going on with those. So, if dividends will be offered, what the scenario is.
Well, the last one is easy. There are no dividends in the Series I.
Okay.
So you want me to work backwards?
Yeah.
Let me take one of them. With respect to isradipine, you are correct. Initially, we wanted Epic to run all the products. Now it's becoming obvious to all of you guys, we really did not want the distraction. I wanted to focus on the anti-abuse technology, because we are working on a lot of products in here that I cannot disclose here, anti-abuse products. However, in Isradipine, I chose to make an exception for the following reason. We had the machine here because I contacted with Elite to start making the product for me. And we bought another machine, which we had also ready to go. Because of the ease of making the product at this facility, and we can do it so much faster than transferring it to Epic, move all the equipment over there, we decided, let's go ahead and get this done. And obviously I was right, because we were done before they are. Their target is June, and we're done right now. So this was a win for us. We picked this off because it was a low-hanging fruit, and it was successful.
Does that also mean that you get a larger percentage of sales?
Well, the contract addresses exactly what we do and all of that. I can't go into details, but the contract addresses, if we make it, if they make it, and what happened, and all of that stuff.
We would get a margin on the manufacturer.
Sure.
Yep, and regarding staffing and capacity, we're nowhere near capacity, even at a single shift. And right now, I think we're at 30 people total on site. 31? 32. 32 with the new hire. Okay. And we really only have one open position for more of an R&D technician to help us with the new products. Yeah, so I don't see any problem with capacity. We shouldn't have to add a second shift unless Isradipine takes over the whole market. Just from a pure processing time, we may have to have a skeleton second shift.
These are the full-time employees, right? Right. So we have consultants who will bring in lab people, but the consultant will convert once certain things happen and so on. So, right.
Okay, gentlemen. Thank you.
Okay, Brian. Thank you,
Brian. Okay. Ladies and gentlemen, I would like to thank you very much for joining us today. It's a very good day for Elite. We will update you in March. We're not going to call in another conference, but we will definitely issue a press release regarding the BE study. Okay? And looking forward to talking to you soon. Thank you very much.
Have a nice day.
Thank you very much, ladies and gentlemen. This does conclude today's conference call. You may disconnect your phone lines at this time. Have a wonderful day.